The stock market crash. Everybody's worried about, is the market going to crash? What's going to happen to my money? I'm so scared. I'm so scared. All right. So I have been trading for about 20 years. So I've actually been through a couple of crashes, the tech crash in 2000, the housing financial crash of 2008. So having gone through this twice and reacted the wrong way the first time and reacted the correct way the second time, I can give you some insights on where your mind should be rationally and where your heart should be emotionally, so you don't end up like just losing all your money in a crash, which will happen to a lot of people. A lot of people, the next market crash, the market will probably crash 50%, but people will end up losing 90% or even being completely wiped out because they're on margin. So here's the first rule. The first rule is don't sell your good stocks. If the market crashes, you may have good stocks like Amazon, Apple, and they're just going down because the market is crashing. There's no reason to sell a good stock. So just hold on to it. Don't worry about it, because when markets crash, they usually bounce right back up. And you can't time the best time to get out of a position and the best time to come into a position. So never sell a good stock. The only time you want to sell a stock is either to take profit or two because the stock is somehow broken or disrupted. Okay, the second thing you want to do is you don't want to watch the news during this time, because this is a time when like the stock market gets into mainstream news. So you don't want to find yourself being emotionally wrapped up in what's going on. So what you just want to do is just go out for a walk. There was a funny story that Warren Buffett told, that he had lost money in a position. I can't remember what stock it was, but he basically said that he would have been better off spending that summer at the beach than listening to the news, reading the financial papers. So when things are really bad and there's a lot of noise, a lot of these news channels keep their audience by being very emotional and being very fantastical. So just walk away, try to avoid watching CNBC or Bloomberg or whatever you normally watch, and realize that you can't time anything. You can't time when the market is going to bottom, so don't even play that game. If you feel like you have to protect yourself, you should always, when you have your long-term investments, you should always have a percentage set aside for speculative investments or to hedge and go short. One of the strategies you can use is just look at the market, and if the market goes into a correction where it falls 10% from its high, just take about 10% of what your portfolio is and just buy an ETF that shorts the market, an S&P 500 short ETF, and then you just cover that short when the correction is over, when the market gets within 10% of its high. You could recoup, well, not recoup, but you can make a little money when it goes down, but you won't feel that anxiety of seeing your portfolio fall so dramatically. Another thing I recommend strongly is never use a leverage ETF to go long or short. That is a very, very dangerous game. A lot of people get wiped out in those. And those leverage ETFs, they don't mirror the market exactly. They are rebalanced at the end of every closing day. So a leverage ETF is actually very inefficient for a long-term hold. They're only good for day trading, and day trading leveraged ETFs is a very foolish game. Another thing I recommend is just go to sleep at night. Don't get up, if you get up at 11 o'clock or 12 o'clock at night, don't check the market. The market's going to be bouncing around like crazy, and there's nothing you can do about it. And all you can do is by staying up to find out how Japan closes at 2 in the morning, all that can do is force you into a bad trade. So you don't want to do that. Also realize that when markets, they fall faster than you think, and they recover even faster than you think. So you don't want to sell at the bottom, because a lot of the biggest gains, one-day gains in the markets, have come right after a market crash. So it's very important that you just stay in the market throughout the entire crash process and don't bail out. And the last piece of advice I have is look at past crashes. Look at how they operated. You'll notice they usually operate in the same way, where you have a big dramatic fall followed by some dramatic up days, takes a couple months to recover, and then the market just goes back into its slow grinding uptrend. So read history, because history does repeat or rhyme. So you'll see it's not the market is not going to crash 90% and then stay down there. If it even if it did, holding onto your portfolio will put you in a better position than people who trade on margin and sell and trade in and out. So it's always sometimes the best thing to do is nothing. And with a stock market crash, it's actually one of the best strategies you can do is literally just hold on and wait for the recovery. Okay, thank you very much. Bye.